Yeah. What's up, guys? Welcome back to my channel. Before we proceed, please understand that this, my friends, is not financial advice. You are more than free to do whatever you like with your money, and so am I. And that being said, let's grab a sip of coffee from my Kaspa Maxi mug. Everything, guys, definitely everything tastes better with Casper. Today we're about to do the same thing we do every day. First, you guys, you already know the drill. You look at market performance for the past 24 hours, okay? And right after that, we will check out prices in details. And after that, we will check on our positions. Are we buying Lambos yet? I know, right? Everybody wants to buy the Lambo. That's what everybody's waiting for. But guys, before we get to everything, you guys already know. I've been telling you, like, yeah, what's going on with the markets is not something that you should take lightly. The month we're already in that September. Do not take September lightly, okay? Because hey, market is about to run, and when I say market is about to run, it's about to happen. And everybody and their grandmama, hey, I've been telling you, pay attention, because the rate cuts is not what you think. It's not. I mean, I don't know. Maybe I'm not explaining it right. I'm gonna play a video for you. I think once you watch that video, you will kind of understand what I am talking about. Okay, so yeah, let's just go right into it. Let's go into it. Just excuse me. This one, let me play this.
The U.S. money supply has exploded, hitting a record-breaking $22 trillion, putting anyone who holds dollars or dollar-denominated assets in real risk of a rapid devaluation. But the real danger isn't just the supply of dollars, but how quickly they move. For the last year and a half, velocity has looked relatively stable, meaning that it's offset any increase in the money supply and given the illusion that inflation is under control. But that is all about to change. And once that velocity picks up, whether through rate cuts or escalating de-dollarization moves, it will jeopardize not only your savings in retirement, but everything you've worked so hard to build. And it all...
So, you see, this is what I'm telling you about. This is like the US, the government, they cannot allow that to happen. They will not allow it to happen. Because again, they've already printed a lot of money. So she's about to explain it even better. They've already printed a lot of money. If they cut rates, they are going to drop the value of the US dollar. You know what? Now, let's keep on watching. Pay attention, please.
Starts with the money supply itself. Simply put, the money supply is just the money in the system. When it goes higher, it's naturally fuel for inflation, but there are some important distinctions that we are going to look at and talk about. Now, the M2 is just a particular type of measuring the money supply. You can think of it like cash, savings, near cash. And what's funny about this chart here is that if you go back, I mean, this goes back to the 80s, there wasn't a big change in the money supply, right? It's all been recent. And this is something I always try and point out. We have such a short-term kind of view of the world, but when you zoom out, the things that are happening right now are not normal. I mean, you can see dot-com bubble burst, it goes up 2008, it goes up 2020. I mean, again, this is a broken system that is artificially being...
You see, that's what I'm telling you. They kicked inflation forward. They keep printing. Just like you saw, the 2020 she's talking about is when the COVID happened. Look at that graph, okay, and you tell me. Look at that graph. See how much money they printed and inversely diluted the value, the dollar's power, purchasing power. That's why the entire world right now, after seeing this from 2008 to 2020, the entire world wants to drop the dollar. And the US, the government, they will not let it happen. Therefore, when you think about rate cuts, a lot of people are about to have a rude awakening. You will see. Okay, well, let's keep on watching, please.
Up and held along. But you cannot just band-aid and glue and tape something together forever. Eventually, it's going to come apart, which we know. And one more important distinction too, before I dig into the data specifically, when I say money, you all know that I know the difference between true money and fiat garbage paper, right? Real money has to be a store of value. Fiat currency, the dollar, there is no store of value, right? It's losing value as we're sitting here, as you're watching this video, it's losing value. And I think it's about to lose a lot more, a lot quickly, which again, we will look at in a second. But back to this, the M2. Now, the Fed isn't necessarily printing all of these dollars that we're looking at. This isn't a chart of the Fed's printing. They create the base layer of money.
You hear that? So when you hear about rate cuts and you hear about stimulus, stimulating does not mean that they are printing. There is other things, other ways, which could be either with the US bond markets, which is that is a specific one. That's why I always point you guys to the bond market, to the MOVE index. Those are things you have to pay attention to. Okay, so yeah, let's keep on going.
Then goes to, let's say, banks and institutions who then lend it out. And that creates this kind of secondary evolution of money and growth and expansion of money in the system.
Let's go back.
But if we're looking, right, it's losing value as we're sitting here, as you're watching this video, it's losing value. And I think it's about to lose a lot more, a lot quickly, which again,
I went back a little because I want you to pay attention to that cycle from when money is getting printed, what the banks are doing about it, and what makes you think that, oh, you have money when actually you don't have any. Okay, just pay attention, please.
We'll look at in a second. But back to this, the M2. Now, the Fed isn't necessarily printing all of these dollars that we're looking at. This isn't a chart of the Fed's printing. They create the base layer of money, which then goes to, let's say, banks and institutions who then lend it out. And that creates this kind of secondary evolution of money and growth and expansion of money in the system. But if we're looking at this chart here together, you might be wondering, okay, so why is it then that from 2010 to 2020, this went up pretty significantly, not compared to what we're seeing today, but went up, and yet inflation was relatively stable, right? Inflation is always chipping away, but let's say it remained relatively stable, low rates.
Exactly. See, money printing went up, but inflation remained stable. Why? Because these guys, they were kicking forward the can in front of them. But we are at the point that you cannot kick the can anymore. Cutting rates is not going to help. It's going to make things worse. But people with that illusion in mind that it has always helped, that's why they are going to jump into any assets. And that's why I'm telling you, you are going to see, for after the cut rates, in my last 4 to 6 weeks, you are going to see the markets run until they realize that, oh shit, this ain't going the way we think it will, and it will crash. Okay, let's keep on going, please.
What's going on here? Well, it all has to do with the velocity of money. The velocity of money is just how quickly money changes hands. It's circulation in the economy. So high velocity is going to be high optimism about the economy, the future, spend, spend, spend. Low velocity is going to be savers, people who are concerned and worried that money is just not actually out there in circulation the way you might think. So you can think of it like a growing money supply with the slowing velocity is like pouring water onto a sponge. It gets absorbed. That money supply actually gets absorbed. Versus if there's high velocity, it's going straight into the pipe and it's flowing through the system. That's kind of how that works.
You see, that's the same thing I'm telling you. If you watch, okay, the rest of the economies in the world, China, Japan, India, all of them, the big ones, they have cut interest rate to the lowest. Okay, before, those countries, they used to have high interest rates, for example. And if US cuts rates, the money that they print gets absorbed by those economies. China, India, Japan, they get absorbed because people take US dollars they borrow at low interest rate and they take them to those economies that have higher interest rate to make profit. That's how all this printing was getting absorbed. But right now, everybody is low, right? Really, really down on the ground. If the US prints money, well, you're about to find out. You are about to find out. Excuse me. Yeah, sorry about that. So yeah, the illusion of the green candle chasers is what is going to pump the market. I'm telling you, pay attention to September, because again, once the government cuts those rates, people are going to chase candles, and people chasing candles. Excuse me, how can I make this thing bigger? I don't know how to make it bigger than it is right now. I would have loved to have it to be way bigger than that. But anyways, once they start chasing candles, it's going to pump those prices. Once it starts to pump them and the government realizes that, listen, the dollar is losing more value faster than it is. So look at the graph that she's showing you right now. Look at that graph. Between 2020 and 2025, see how fast the money have lost value. Look at that. I'm telling you, cutting rates is not going to help. It's going to make things worse. Therefore, well, if you have ears, pay attention. Let's keep on watching, please. Let's keep on watching.
Look here, 2010 to 2020, money supply goes up. Here we have the velocity. You can see during the same period of time, 2010 to 2020, it was actually slowing down. And of course, this is coming off of the great financial crisis. It completely makes sense that we could.
So yeah, you saw it slowed down. It makes sense. People got free money in 2021. Guess what? Some people saved. Some people were investing outside economies, because China had higher interest rate. Japan had higher interest rate. People like the Philippines, people like India has higher interest rate. That's why it was slowing down. Okay, but yeah, now every country interest rate is down to zero. So you cutting rates right now, printing money, that money is going nowhere. And those of you thinking it's going to go into Bitcoin, you are in for a surprise. Okay, anyways, let's continue watching.
To see velocity slow down and then completely drop off in 2020, which is interesting, because another point you might be wondering here, if we kind of zoom in to the last 5 years, is that of course there was a significant increase in the money supply. Actually, I'll do 10 years so we can see this a little bit clearer. Significant increase in the money supply right here, bang. But then why weren't we seeing inflation immediately? Why was there kind of that lag effect? And if you look over here at velocity and we do the same thing, you can see that, there was a shutdown. People weren't spending, people were saving. It took a minute before the saving kind of took off. And that's when inflation really hit us hard. And again, as always, this is an oversimplification. There are many levers to be pulled here, but you get the general idea. Now, the media would have you think that it's all rates only, right? And I think there's a couple reasons they do this.
See, now we are going to the part, like I always tell you. They are going to tell you, yeah, we cut interest rate, everything's going to be fine. Oh, listen, but nobody is looking at the macro economy. That is the problem here. You are not looking at the effects. You are not looking outside the box. Everybody is just looking at the US. You need to look outside. Look at the dollar on the world stage. Look at it. People are trying to ditch the dollar. China, Russia, and a bunch of them, they are trying to de-dollarize the entire world. Okay? They are trying to do something else. And US is trying to stand on it like, nah, we are the power. Okay, we are number one. You cannot do this. So it's going to take a lot of time. It's going to take a lot of things to change before people can ditch the dollar. But cutting interest rates right now, my friends, yeah, I don't know. That's why I keep telling you, pay attention to September. Okay, now let's keep on watching, please.
Is because they want to make sure that you feel like they know what they're doing, that they are in control, that they know what's happening. And I think number two is they don't want anyone paying close attention to the money supply. This is not something that you hear about on the news very often. You'll be hard pressed to even find an outlet probably covering the fact that we hit a record high. In fact, so much so, there even used to be a different measurement called the M3, not to go on too much of a tangent.
Yeah, the M3. That used to be, I think it was 2006 when they stopped it, either 2006 or 2007. But before the economy crashed in 2008, there used to be an M3. Okay, there used to be that. A lot of people, I stopped looking at it because they stopped supplying the data without it, because the M3 used to show the actual money supply. used to be like, it used to front run the M2. So I think they're still supplying it, but only some people can see it, not everybody. Okay. Anyways, let's keep on going.
But I think you will find this interesting. The M3, which I pulled up here as well, this was also including not just cash and savings and near cash, but shadow banks and money mutual funds and all these other types of financial instruments. And what was happening is that this was actually completely outpacing the M2, as you can imagine. Why would that be? Because there was more money being created and in circulation than they wanted people to know about. So they actually closed this. They discontinued it in 2000.
See, like I was telling you guys, like, hey, Fed bought those bonds, those treasury bonds, but it's not, you can't see it on the M2. You can't see it. If we had access to the M3, we would have seen it. I'm telling you, they already printed money. Okay, they stopped showing this because people like me and other people who pay attention to economy, we were catching up onto the game. Okay, but anyways, like, let me rewind just a little bit. Yeah, let's continue watching.
6, funny timing, right? 2 years before 2008, 2000. This was also including not just cash and savings and near cash, but shadow banks and money mutual funds and all these other types of financial instruments. And what was happening is that this was actually completely outpacing the M2, as you can imagine. Why would that be? Because there was more money being created and in circulation than they wanted people to know about. So they actually closed this. They discontinued it in 2006. Funny timing, right? 2 years before 2008, the great financial crisis. You can see here, $10 trillion is what we saw in 2008. And if we go back over here to the M2, the one that's still publicly available, or in 2006, more like $6.5 trillion.
Wow. Look at the difference. The M3 was showing the actual money supply, 10 trillion, but M2 was showing just 6 trillion. Wow. So only them know right now, only they know. But I'm telling you, those signs on the wall, they are showing something. So yeah, once they cut those interest rates, yeah, you are in for a surprise. Okay, let's keep on going, please.
So significantly outpacing it. It was raising red flags, and they didn't want people wondering, okay, well, why are institutional funds being created at such a quicker rate? Looking back, we know what was going on, but it's funny, they discontinued it. They never brought it back. Go figure. Those who control the present control the past. Those who control the past control the future. Name that quote. That's what I think of when I think of that 2006 chart being discontinued, disappearing. Anyway, all right, back to present day. So here we go. Here's the peak of the 2020-2022 spend, right? We were just shy of 22 trillion today.
Wow.
There we are. We have crossed over the 22 trillion threshold. But like I said, the money supply is just one factor here. The other important thing to look at is what's going on with velocity.
Again, that is exactly what I was telling you guys. Okay, so if you really pay attention to it, that's why I said in one of my videos, I do remember telling you, people gonna take their cash because cash is king. And trust me, when economy crashes, people are gonna try to buy the S&P 500. People are gonna try to buy government-owned assets, okay, like bonds and stuff like that. Because, guys, government always pays. People are not gonna put their money into Bitcoin. Trust me, it's not gonna happen. But well, let's watch and see, okay? But let's continue right quick.
Now it's interesting because you will see for about the last year and a half, velocity has remained pretty steady. Again, giving this illusion that everything is fine. So why has inflation kind of held somewhat steady? I'm not saying that it's gone away because we know it's still, it's
that simple, okay? The simple answer to that question, why is inflation remain steady, is because one, the treasury bonds, they bought them back. They are holding them. So now, you remember stablecoins? When stablecoins came out, what did they say? You have to buy the bonds to be able to deal with stablecoins. That, my friends, is what is going to lift the US dollar up. Once it lifts it, because everybody and their grandmama banks is trading on stablecoins, right? that's gonna lift it. That's why if you see for the last year, before the trade wars happened, I'm telling you, I think these guys knew that this trade war was gonna happen. So they forced all these countries, they forced their hands to sell the treasury bonds. Now they bought it back. They bought them back, and guess what? Banks are gonna have to purchase those bonds from the government if they want to deal with stable coins. So everything is playing according to plan. Therefore, inflation has not gone away. That is the biggest problem they have to deal with right now. Therefore, they are going to cut rates. Once they do, everybody and their grandmama is going to put their money in it. And the effects are going to be very, very catastrophic. But anyways, hey, everybody thinks it's going to run till 2026, right? You are in for a surprise. Okay, let's continue watching, please.
Chipping away at our wealth just at a slower pace maybe than it was a couple of years ago, but still significant, but it has remained somewhat steady. It's because the velocity of money isn't moving the same way. This is tighter lending. This is higher interest rates. This is more saving, right? That's what we're seeing right here. This is tariff.
You see, it slowed down because the interest rate was high. Interest rate being high, being people, okay, were investing into the U.S. economy. People were doing, like if you go lending, if you go buying cars, buying houses, things like that. People were investing into the U.S. economy. Now they're going to cut rates, which means they're going to drop the interest rates. Like I've been saying, where are you going to put the money? You can't even borrow. Even if you borrow the money, where are you going to put it? Where are you going to put it? Because the Chinese economy is down, Indian economy is down, Japanese economy is down. Where are you going to put it? I'm telling you, for sure, it ain't going to be in Bitcoin, because Bitcoin. Well, let's continue watching.
There's a lot of things at play that we're seeing as far as why velocity is not moving. But the bottom line is that what could potentially cause this to go back up, right? Right now it's steady, but what happens if that were to shoot up? What could we expect to see? We could expect to see inflation the same way we did here come roaring back, right? And I think it's going to be even worse because there's even more potential for more spend. At the end of the day, when you think about it, inflation is not a bug, right, in the system. It is a feature of the system. It is the plan. It is the policy. All we have to do is look at this. I know you guys have seen this a million times, but it always riles me up when I see our purchasing power being taken away from us. And do not get complacent too. Look at this line down here. It looks somewhat less impactful when we see it from going back to 1913, but look at the last 5 years. This is just in the last 5 years. This is our purchasing power being chipped away at little by little. All it's going to take, right, is a little bit of that oomph, whether that's interest rates get cut, whether that's de-dollarization accelerating. That means that less dollars are foreign, right?
You see? Again, the value, this is the problem that the Fed is facing. The value of the dollar is going down. I've been telling you this for how many videos now? I've been telling you that if they cut rates, the value of the dollar is even going to go lower than it is. We are going to have us 2008 again. Or if what you call them, the China, Russia, and all of them, they band together, they try to do what they want to do, that is even going to be worse. But on that camp, I don't care. I don't really care about it on that camp, because we know that part is controlled. They tried it when the trade war started. It didn't end up good for them. So yeah, that part is controlled. Now is the interest rates, is the rate cuts. That is what is going to crash this thing. If the cut, well, you about to figure that one out yourself very soon. Let's keep on watching, please.
Our dollars being more domestic, we're going to have less interest in our debt. Less buyers of our debt means that we have a serious refinancing issue, that we would need to cut rates more significantly. And what do cut rates do? Well, they increase that velocity up. And when that velocity goes up and we have the money supply at a new high, what's going to happen over here? This chart is going to go down, 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 meaning our purchasing power is going to be even weaker than it is today. How much more are you willing to lose of your hard-earned savings? That's the conversation that I keep having with people. And there are too many people out there who go, okay, well, I see what you're saying, but what really is the trigger going to be? And I think, again, the biggest thing that people are missing here is that the world is walking away from the dollar. And in the past, they couldn't because there wasn't an alternative. But it is happening. This is no longer some kind of hypothetical situation. This is a reality. And if you're following the news at all this week, you'll see that the SCO summit, what we're seeing here, right? China's Xi pushes a global new order flanked by leaders of Russia and India, right? They are showing strength and unity against the United States. And I'm not even talking about a war with the United States. I know that everyone's always talking about that. I'm just saying that a new global order means an order that's not relying on the West.
This, my friends, this does not worry me. Okay, this is one thing I will have to disagree with her. This does not worry me, because everybody knows the biggest consumer in the entire world is the United States. Xi Jinping is right now. China is kind of worried that, okay, if with the trade wars happening, the U.S. will become a producer country. That's what the U.S. will become, and almost 75% in exports in China is being used in the United States. And if US begins to produce, China's economy is going to suffer. That's what's going on here. I think they are just doing a little bit yawa, a little bit how do you say it? Where I'm from, we call it yawa. They go there, just they yap their mouth. That's it. That's what they're doing. Look at Russian economy. What can Russia offer to the world? Absolutely nothing right now, because things are not looking good over in that camp. The same thing with the Chinese economy. What could they offer? Absolutely nothing. But US, they can consume, and if they start to produce, because right now things are beginning to take that turn. That's why you see them banding together, because things are really, really looking bad. So when it comes to that, I disagree completely with her. But I think she should, everybody, and including her, should just look at the interest rate. That is where the whole problem is, in the interest rates, okay? Let's continue watching, please.
Dollar dominated, right? We see that here too. SCO summit could challenge US dominance. US dominance is dollar dominance. Really, they're two sides of the same coin, and lend weight to China's vision of a multipolar world. And again, this isn't me dogging this. I mean, at the end of the day, right? I don't think that countries should be oppressed by the United States financially. I don't think that, if you can have your reserves frozen and seized, it's just bad business. Why would you ever hold US dollars moving forward if you didn't have to? It would not be my preferred foreign reserve asset. And I think there's a reason that we continue to see a decline in dollars and a move to gold, a tangible asset that has real value. But again, this is...
So now, see, just like I was telling you, people are not going to move to Bitcoin. If shit hit the fan, it's going to be gold. Gold has always, when people transition, okay, from one type of money to another, gold has always been the the number one place people want to store their value, not Bitcoin. Trust me, it ain't going to be Bitcoin. You saw it, let's just say, 2008 there was not Bitcoin, but you saw that in 2021. When in 2020, when COVID hit, what happened? People were storing their value in gold. There was still Bitcoin, but Bitcoin was crashing, right? You saw that the most recently, the trade wars, stock market was going down. Everything was crashing. But what? People were moving their money into gold, storing their value into gold. So yeah, it's going to happen one way or another. So this China, India, and the rest of them doing this yawa they are doing, for me, it's just a waste of time. It's just, people have tried to overthrow the dollar. People have tried, trust me, and it never ended good for them. Okay, you guys remember the euro, right? The euro was created to overthrow the dollar. And what's happening today? What happened? So again, I think it's going to end up crashing between themselves, because we already know China is never truthful about the data. Russia, I don't know that camp, what it looks like, but I don't think it's always nice with them. Okay, India, the same thing. So it is coming. You see them banding together because of the trade war. As soon as they cut a better deal with the United States, you will see. All this right here they're just doing is just news, and you will see. Okay, let's continue watching.
Be, in my opinion, the trigger. This is going to be what's going to cause the Fed to have to cut those rates to refinance our debt. And ultimately, there is always a buyer, but at what cost? And what if that buyer is a little bit too close to home? What if it's the Fed themselves? Then what happens? We know what happens. We've seen what happens. It's our dollar disappearing. Right? I mean, it's been happening for a long time, but I do think what we're living through today, like I say, it's not normal. When we look at this, this is not normal. This is anything but normal, and our debt is continuing to skyrocket. This is a ticking time bomb just waiting for the fuse to be lit. The only saving grace I will say about all of this is that we do have kind of this unique opportunity right now to be able to still protect ourselves before it is all taken away, right? I always talk about this reset that we're in and how it is a process and an event, right? It's one that's accelerating, and we can all feel it. We feel it in our wallets. We feel it in our savings. Those who are already retired, I know, feel it. Those on fixed incomes, because what are you going to do, right? You can't necessarily go and make more the way you could once before. I know people who I talk to who are devastated. They want to leave behind a legacy for their children and their grandchildren, and they're unable to do so the way they once thought because 25%, more than 25% has been taken from them just in the last 5 years. Legalized theft. That's what it is. And we can see from history, we study currency resets here at ITM, the patterns that emerge time and time again. All fiat currencies end the same way. The value that they were printed on a piece of paper, they're worth nothing. If you want to learn more about currency resets through history too, we do have an incredible free resource. It is called the Built to Endure report. I highly...
So yeah, let's go back here. That's the end of it. So just like she explained, the same thing I've been trying to explain to you guys day after day, time after time. Okay, interest rate, yeah, they're gonna cut it, but it's gonna be, the market is gonna pump because people are green candle chasers. People are stuck in that same loop. That's what they're stuck. They already know, like, oh, they cut interest rates, they print money, and then people are gonna borrow the dollar to go and invest it somewhere else. That will make the economy go up. Bitcoin go, S&P 500 go, stock market, everything goes up, right? But what everybody's not looking at, I told you, step outside of the frame to look at the picture. You look at the picture, go, that's a maxi mug. If I'm drinking in it right now, I'm not going to see it correctly until I pull it outside and I look at it like from afar. Wow, that's a nice crown the maxi mug has. I can dig that. You see, stay outside the frame and you will see the print money. Where is that money going to go? If the rest of the world is already at zero, where are they going to go? So yeah, they are going to see it once it is cut, and they see that the inflation is even running with 10 legs instead of 2. Guess what? They are going to raise those interest rates right back up. And once they do, the US dollar is going to try to get that little value, and that once Dixie starts to go, we already seen it here before. I show it to you every day. Dixie goes up, what happened to Bitcoin? Bitcoin drops. And unfortunately, every other coin, your grandma coins, Uncle T's coin, whatever you call it, is tied to the Bitcoin. And once that happened, bam, down we go. Last bear market, that was what's going on, right? Bitcoin was dropping, everything was going. But Kaspa was going up because people were beginning to understand what Kaspa is. And this time, this development lined up in this pipeline is what is going to push Kaspa to do the same thing again, the opposite way. The stablecoin law that is coming on is what is going to push Kaspa on the opposite direction. I'm telling you, things are going to be crashing, but the only thing that is going to be running is called Kaspa. Okay, maybe Quant could also run, because let's see what the ISO 222, what happens with that. Because if Gateway goes live, for sure Quant is going to run. But if it doesn't go live, yeah, it's going to crash with everything else after this September. And that's why I keep telling you, pay attention to September. Those of you who don't want to, okay, that's all right. At the end of the day, I'm going to sit here and I'm going to laugh at your ass. That's it. That's what's gonna happen, okay? Like I told you, people today, right? Uncle T, Uncle T, that guy said something. He always has something, okay? Today he asked me. He was like, yo, Neff. I said, what's up? He said, dude, I'm trying to have electrolytes. I said, electrolytes? What are you? What? You know what electrolytes are? And he goes, man, I saw the announcement on TV that electrolytes helps you, give you more energy. I say, yeah, they do, but depends on what kind, on what you're using them for. He goes, you know what? Fuck it. I'm about to go drink energy drink, but I don't like the way it tastes. I said, you don't like how energy drink tastes, but you're going to drink it. How are you going to do with the taste, the taste in the mouth? He goes, watch me. So I started looking at him. This guy will grab energy drink. He will drink it, swallow quickly, and grab a cheesecake and bite. Oh my God! I say, Uncle T, what are you doing? Okay, let me show you right quick. Let me show you. I'm telling you, let me show you, man. Let me show you. Uncle T is busy. He's trying to lose weight, getting ready for his Kaspa Millionaire moments. I'm telling you, watch this. Watch this. This is it. Uncle T doesn't play. Uncle T is like, shit, I need to have energy to work out, but I don't like the taste of the energy drink. So look at it. Look at that. He's drinking that motherfucker. Uncle T does not play around. I'm telling you, man, he's drinking this shit, the energy drink, to get energy to work out, but the taste, he's taking it out with that. Oh my God, this guy is something else, guys. This guy is something else. Anyways, guys, let's go right quick. Let's go look at the market. Let's see how the market has been performing for the past 24 hours. Okay, let's go look at that. Let's see. To do that, we're gonna need our good friend Crypto Bubbles. Where's my good friend at? Crypto Bubbles. Right there. See, like I told you, money is not gonna trickle down. Well, those of you who think it is, yeah, you are in for a surprise. Okay, it's about to pump. Trust me, because everybody and their grandmama is trying to front run the market. It's trying to do that. That's what is happening. I told you stay away from the word Liberty Fly, right? A lot of them are holding that hot potato right now. But anyways, let's go right quick. Let's see. First, our good friend King Kaspa, KAS, and we do have here King Kaspa. Here for the past hour, Kaspa is up 0.2%, 3% down on the day. 7.3% down on the week, 4.4% down on the month, and 47.3% down on the year, sitting at a market cap of $2.16 billion and a 24 hours volume traded at $24.34 million. Okay, now we look at the Cubic. Let's look at Cubic first. The high risk, high reward. Okay, I've been trying to get an entry on this, but yeah, let's wait. First of all, we have here 5.1% up the last hour, 7.8% down on the day, 13.9% down on the week, 15.7% down on the month, and 38.1% up on the year, sitting at a market cap of $263.50 million and a 24 hours volume traded at $4.91 million. This is the reason why I'm looking for an entry. That volume is very, very low. Okay, now we look at Jasmine, the Japanese Bitcoin, and we have here 0.1% up the last hour. It looks like Bitcoin might be doing something, because if Jasmine is green, yeah, something is happening in at the turtles camp. Okay, 3.2% down on the day, 8.4% down on the week, 4.5% down on the month, and 25.8% down on the year, sitting at the market cap of sitting at the market cap of $670.89 million and a 24 hours volume traded at $16.91 million. Again, that volume, man, that volume, something does not add up. Okay, now we look at let's see here the total. Where the total at? BTC, where's the turtle at? The orange guy. So, see, that's why you see on the last hour, you see some coins, utility coins are going to move because Bitcoin is showing a move, okay? On the last hour, 0.1% up, 1.1% down on the day, 1.5% down on the week, 3% down on the month, and 90.5% up on the year, sitting at a market cap of $2.20 trillion and a 24 hours volume traded at $36.68 billion. Again, that volume is so low, it ain't even funny. Like I'm trying to tell you guys, okay? Those are things that I look at. Look at that volume, it's low. Bitcoin is severely oversold. Everybody else, it thinks like, okay, September is going to be bad, so this front run the market thinking they're going to buy at the lowest. Kaspa, for example, okay, everybody's shorting Kaspa right now. But when you look at the liquidation map, if Kaspa goes above 9 cents, is it 9.5, 9 cents, $20 million worth of liquidation will happen. Okay? But if Kaspa goes down, only $3 million worth of liquidation will happen. So what do you think these market makers are going to do? They're going to push that price up. Trust me. Same thing goes on the Bitcoin's camp. People that will be liquidated if Bitcoin goes back above $120,000 are way higher than people that will be liquidated if Bitcoin keeps on dropping. So guys, pay attention to September. It's going to be a lot of money to be made. Don't say I didn't warn you. Right now, TA, like I said, TA is worthless. But anyway, let's just rush through it and see what's going on with prices in details, okay? To do that, we're going to need our good friend, Trading View, okay? Trading View, what we got going on in that camp. Trading View. Let's see. DXY, see? DXY going up and Bitcoin dropping. That's what we want to see, an inverse correlation, okay? Now, if you look at the charts for Kaspa, for example, this is the hourly chart. Yeah. I still think it's the same. It's just sideways. See, we go to the same 8.2 and up we go to 9 cents. 8.2. We've been just going that range bound. Okay, Kaspa with the smart contracts, this news that came out, okay, with smart contracts getting launched, you're about to see these things start to even take off harder than this. Okay, if you look at it on the 4 hourly, let's see if we can see anything different from what was yesterday. Yep, nope, nothing, still the same. Okay, price still going sideways. You can see, let me bring my arrow out and you will see that here that we got low, high, low, again, low, high. It's gonna do the same. Okay, it is, oh, come on, let me take this out right quick. I gotta get that out and bring my arrow back. What's going on with this damn thing? Let's see. Okay, like I'm telling you, see, I saw you low, high, low, high. That's what we're doing. Low, high, low, high. And again, every time price goes down, it always get attracted to the moving average. Okay, everything is okay. People are just confused because of the I'm telling you, it is going to happen. And once it does, don't say I did not warn you. If you look at it on the daily, see right here, the same thing. Okay, the same thing is going on right here. It's a bull flag. We still have resistance. Okay, if you draw a line, you will see the resistance. That's what you are going to see. There is not much on that. I'm just telling you, if Bitcoin start to reverse like I think it's going to do, you're about to see everything else run up with it. Because money, my friends, is not going to trickle down. It's not. You're about to see. Okay, so yeah, pay attention to those things. For me, price targets are still the same. 12 cents is the major resistance we need to break. Once we break that, we have 15 cents. After that, 18, 19 cents respectively. And then you have all-time high around 20 cents and then price discovery. Everything is going according to plan. You can cry about it if that's what you want to do, or you can see the opportunity right in front of you, because Kaspa is about to keep, well, you don't say I didn't warn you. I keep telling you, okay? That's what's about to happen right now. Anyways, let's go look at Quant right quick, okay? QNT, the banker's coin, and the coin a lot of people love to hate. What do we have? Yesterday, I told you this. This is what I told you yesterday. Those of you who pay attention, great. If you didn't, I don't know what to tell you. I told you, look, pay attention to the ribbon. That's why I told you, right? ribbon was curving, and normally every time this does not fail, price always gets attracted to moving average. I told you, if you wanted to scalp it, those of you who are day traders, this is what you would have been doing. Okay, look at the ribbon, it's about to turn green, right? Again, look, see, quant is about to go. What we need to see quant do right now is break 102. Once it breaks it, see what the price is going to do. And on top of that, if Bitcoin starts going up aggressively, you're about to see quant follows, because again, money is not going to trickle down. Okay, if you look at it on the 4-hourly, let's see the same thing. Like I told you yesterday, pay attention, ribbon is spraying out. Once, first of all, it usually happen on the hourly, then the 4-hourly follows, then the daily follows. Everything is beginning to gather that strength. I told you, September, guys, pay attention to September. Anyways, yeah, what do I know, right? I'm not your financial advisor, but right now everything is playing according to plan. You're about to see it. Okay, if you look at it on the daily, let's see, just like I said, see, price got attracted to the moving average. We started with the lower time frame. We have started to see how the moving average is beginning to attract the price, and we've seen how the ribbon has also started to, spray it out before it started to curve. That's what is happening. If you go look at your MACD, your RSI, and things like that, you will also see that those things are severely oversold. Severely oversold. That means they have no way but to go up. You will see. Okay, if you look at it on the weekly, price targets are still the same. Like I told you, it's a big bull flag we are forming. First resistance, $125. Once we break that, we are looking at 151. We break that, 176. After that, there is no resistance between that and $230. We see what happens there, and then start looking at $400 all-time high. And I'm telling you, price discovery will come before you could even say hello. Guys, pay attention to September. Pay attention, okay? Anyways, now, we're going to skip Jasmine. Like I'm telling you, Jasmine is not going to do anything if Bitcoin is not moving. So I'm going straight to the turtle, see what's going on in that camp, okay? Let's see BTC, USDT. Let's see what's going on and check on this one. Again, see? Everybody in that grandmama kept running yesterday. I told you, it's a fake out. They know. The market makers know. It's a fake out. Look, even with the ribbon turned red, what do you see? It has already started to curve. Already. It has already started to curve. There is, well, you guys are going to find out very soon. Now, if you look at it on the 4-hourly, what do you see? Look at that candle. We're still waiting for that candle to close. If it closes Star Wars candle, like I always tell you guys, reversal, that's what it means. Okay, but well, let's wait and see. It still has let's see, 2 hours 7 minutes. Let's see how it's going to close. Okay, again, if you pay attention to the ribbon, it's squeezing. It's still red, but it's squeezing because it has already curved upwards, right? Now it is still squeezing. Let's watch and see. And the same thing plays out when I usually tell you, price always, every time, gets attracted to moving average. That's a simple trick. It's a little wink trick. Like if you didn't know, pay attention to that thing. Okay, you're about to see it. Okay, don't say I didn't warn you. If you look at it on a daily, it is still the same to me. Like I'm still here just laughing at it. Look at it on the daily. What do you see? Look at the curve. Ribbon still red, but it has started curving. Look at the candles. First day, second day, we're on the third day right now with the next candle again green. If this thing closes like this, the next one is going to be green too. So yeah, pay attention. Things are happening. Bitcoin is going to run. It's not going to be like people think, like every September usually be red. You are wrong about it. Very wrong. Okay, so yeah, for me, everything's still the same. I'm telling you, I'm paying attention to September 29. That's what I'm paying attention to. And once you see the lower Bitcoin went, the more the top could be looking at $150,000, $160,000. I already marked it. Like I told you, just, I don't know what you're doing. Me, I'm paying attention to the market. Because once they cut this interest rate this September, you're about to find out. It normally lasts 4 to 6 weeks. So let's see. They cut them. Let's see what at the end of September will look like. If it is still bullish, we keep the shop open. If it is not, yeah. But like I told you, the rest of the indicators, they're already screaming like, yeah. A lot of people are about to figure out that khaki no be leather. Khaki is not leather. You're about to figure that one out. Okay? Anyways, now let's go look at my positions right quick. Okay? I know, like I usually tell you, please do not get into leverage trading if you don't know what you're doing. But if you want to venture into it, you want to learn how it is done, down below I do have Bydfi, which I recommend for beginners, Phemex, Margex, and Wix exchange. Wix is giving the highest amount of money lately. Go use those links, sign up, meet their deposit requirement. If you do, they're going to give you free money. Get the free money, take $20 out or $100 or whatever and practice. Trust me, you're going to make mistakes. And it's better to make those mistakes with the $100 than using your entire free money. Let's say if you meet it with Wix, it's $30,000. Using $30,000 and losing it, that is a blow that you will never recover from. Okay? I'm trying to tell you, or else you are going to be the most respected member in Rec City. Come on. Anyways, now let's go right quick. Let's go look at my positions. Okay, first we are going to start with Bydfi. Excuse me for a second. Okay, sorry about that. Now let's start first with my Bydfi right here. Let's see what Bydfi goes on today. My overall, yeah, still the same like yesterday, $11,000 or 100 around there. Market is doing its thing, and yeah. Let's see what we go from there. Now, if you look at my contracts, see, Kaspa is still sitting at the same thing. It goes 8.5, 8.6, comes back to 8.2. So, range moving. So, if you look at my contracts, Kaspa, I am still down 57%, which is $5,100 approximately. Nothing changed. It's still the same thing. If you look at Quant, I am also still down 4%, which is $479 approximately. You can pause this if that's what you wish to do and look at my numbers. Okay, now we go look at Phemex. Looking at Phemex, you will see that here I'm trading King Kaspa and the Japanese Bitcoin. See, we are still the same thing. My overall sitting at 7,300 approximately, or 400. So if you look at my contracts, you will also see the same thing. He hasn't moved that much. Kaspa, I'm still sitting at 11% down, which is $477 approximately. And Jasmine, still the same thing. I'm still sitting at 76% down, which is $8,300. Just pay attention. You can pause it and you look. So Jasmine, my liquidation is 0.006, less than a cent. Are we gonna get there? I don't think so. But let's watch and see what's going on in that camp. Okay. Now, if you look at last but not the least is the Wix exchange. On Wix exchange, I'm trading King Kaspa and Quant. My overall still the same. Like you guys remember, yesterday was sitting at 4,300. It's almost still the same. That's where we're sitting right now. If you look at my contract, you will see that here. On my Quant, I am still up $952. I'm thinking about taking profits from this and open a cubic trade. So yeah, I'm thinking about doing that. But well, I might not. Maybe I will not. But it's just tempting. The way cubic looks is very tempting. But on Kaspa, I am still up $29, which is it's doing its thing. Okay. If you want to, you can pause you can pause it and then look at my numbers if that's what you want to do. Okay. Anyways, guys. As you can see, I'm telling you, pay attention to September. These rate cuts is not going to do what everybody thinks. But yeah, the FOMO is going to be in. They're going to pump the price for a little while. And then they will realize that khaki no be leather. Or if you say it in the right English, khaki is not leather. They will realize it. And once it does, yeah. Yeah. Anyways, guys, thank you so much for watching my videos. Okay, please don't forget to subscribe. I am trying to make it to 5,000 subscribers. Okay, don't forget to also like and comment. I am very interested in knowing what you think about everything that is going on in the market today. I'm telling you, it ain't gonna be a super bull run like many people think. Something else is coming. But I will keep monitoring the market for me. I don't know what you are doing. I'm not your financial advisor. And also don't forget to share so that other millionaire-minded attitude like you and yours truly, we can see these videos and the family can grow. You will never know what you will learn from a stranger. Okay, I am a multinational. My mother from Equatorial Guinea. Okay, Alejandro. That's why you see the name, the black Mexican. Cameroonian. My father being Cameroonian. Okay, yes, that's why I speak French. And again, I grew up in Nigeria. I feel like I'm a Nigerian. As a matter of fact, if you go over there, they will tell you my real name, Ekweme Obokri. One official langua. They will tell you that, all right? So they will tell you. I feel like, yeah, I'm a Nigerian too, by rights. I don't know, those of you Nigerians who are watching, whether you like it or not, I am an Igbo man. Whether you like it or not, okay? Anyways, guys, thank you so much again for watching. Until I see you in my next one, please, guys, pay attention. Things are not what they seem like. They are not, okay? Until I see you again, pay attention, okay? Take very good care of yourself, and bye-bye.